Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 1st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, though, I am here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data. Across the pond, we got manufacturing PMI coming out of Great Britain. That came at PMI is Purchasing Managers Index. Remember, this is one of the most important economic data points we have because it is forward-looking. The purchasing managers see what kind of demand is coming in, and they strategize their production based on that. And these purchasing managers then buy the inputs for that manufacturing output then. All right, so manufacturing PMI out of Great Britain, like I said, came in at 53.1. We got a lot of these numbers to go over, so bear with me a little bit. And then we also got ADP non-farm payroll change here in the United States. Like I said, I'm going to be popping here. Back here in the United States. So we got the non-farm payrolls coming in at 275,000. That is good. That means those are hires. And expected to be 181,000, so much better, almost 100,000 better than expected there, especially when you throw in the revision, because last month's number came in at 129, let's call it 130, and came out 151. So we had a revision of about 20,000 higher there, so that blows that number out of the water, making that 100,000 over expected. I would think this would cause the equities to get a little bit more push to the upside, but they've had a nice run. And a lot of times when we see these really good economic data points coming out after there's been speculation of that, then we see those guys that got in early start to cover into that strength. So that may cause the market to roll over even more. So keep that in mind going forward also. Then we also got here in the United States, our ISM, which is the Institute of Supply Management. PMI, Purchasing Managers Index, came in at 52.8, expected to be 55. And with these PMI numbers, anything above 50 is expansion, anything below 50 is contraction. Then we got ISM manufacturing prices came in at 50, expected to be 54. Again, this number, anything above 50 is expansion. We are right on the cusp of 50. So anything below that starts showing contraction. And last month's number was above 50, as you can see, or as we've talked about with the revisions before. Last month's number was 54, but the two previous numbers before that were below 50. So it is toggling back and forth. And then finally, we got crude oil inventories coming in at a build of 9.9 million barrels. Expected to be a build of 1.3 million barrels. So 2 months in a row, well over expected builds. So supply really starting to build up and not really seeing the demand for that product. Throughout the day, total vehicle sales, big number. And then finally, late today, 2 o'clock Eastern, 1 o'clock Chicago, we get the FOMC meeting rate decision. So keep that on your calendar. That's going to be a real big determining factor. I think this is one of the bigger FOMCs we're going to be looking for because they've paused. They've had time to see some of this rate hike come into the market to see what that's going to do to the overall economy. I'm showing that it's slowing the economy, which is what they want, but we haven't seen inflation. So one of their big mandates was to, hold off on inflation. We're not seeing it. Even in that Institute for Supply Management prices paid, it's almost contracting. That shows there is no inflation, you guys. And build in crude oil. We should see prices come off as well, as we're seeing going on right now. So a lot of things going on today. Keep your eyes out. Let's talk about crude oil right now. Slightly off by about 75 cents. And it is still toggling back and forth between our trying to find support on this 23 Fibonacci, which lines up with $63 a barrel. So we're at 63.15, just barely above that spot there. So I am still looking for crude oil to come down and break down below this $63 a barrel area. So today we pierced it, as you can see right here. We did pierce a little bit. I'm expecting a settlement below that, and then we will roll back over into this area between these two Fibonacci areas and fill in some of this area here. It may even, with this much of a build, come back down to test this $58 a barrel, or probably closer to the let's call it $59 a barrel. I think it's at least going to go down there and test that area, especially with these builds we've been seeing recently. Gold futures, really kind of waiting for the FOMC. You know, if they start talking inflation, you could see gold futures spiking higher. If they start talking about inflation, we should all start tweeting to them that we aren't seeing inflation anywhere and demand where inflation is coming from. All right, bonds getting a big spike up to the value area high here. This is, you know, in between these areas is basically where the most time and volume has been spent. About 70% of that has been spent there. So only about 15% of the time spent above, 15% of the time spent below here. So this is where the bulk of the transactions have been taking place. This is 70%. So that tells you where the overall market is really finding value. So when we start extending up to the upper bounds of this, that starts showing that we are going to see interest rates go down, which means the Fed going to lower interest rates. I don't think you're going to see that today. I don't think that these guys are going to admit defeat this early. And by having to flip their gears and start lowering interest rates, that to me would be a signal that they are incompetent, which I've already believed that they are a little bit. I think they've already overdone it, but I think that their egos are going to kind of be on edge, if you will. And I think that they are going to come out and just say that the economy is doing what they want it to do at this point. So I don't see interest rates going lower, at least this year anyway, unless we start seeing some real bad economic data and seeing ourselves looking like we're in a recessionary type environment, which we aren't yet. They aren't going to lower interest rates, I don't believe. All right, so the VIX is starting to move higher. We're back up into the teens. Actually, it looks like it's unchanged right now, which it is, but it's up on the day because we're seeing some equities see some weakness. Dow Jones, not so much. As you can see, it's positive on the day, so a bit of a mixed bag here. And then we've got VIX unchanged on the day right there at about 13. We're back in the teens, but you know, you would expect with all of these other markets and levers and pulleys going on right now, with bonds higher on the day showing maybe a possible lower interest rate. I don't think that that's going to happen. I mentioned that several times already today. But with that being said, the equities are starting to push higher, which is why we're not really seeing VIX do a whole lot today. Right here we have the Dow Jones Industrial Average up about 90 points. They are starting to look for their historical highs. NASDAQ positive territory, 60 points. But, you know, have you ever seen a messier spot right here at the top of a move where we start seeing it flatline? This is that type of rubber band that I talk about so much where, you know, you start seeing this type of scenario where you get this rubber band tightening up where we just can't break out of a tight range. It's pent up energy and it's ready to pop in one direction or the other. At all-time highs, you know, with the Fed coming out today, I'm not going to play it. I'm going to wait for this move to happen. I'm going to start to wait for this snap and then jump on board with that trend. So I'm holding off so far today and going to wait to see how everything starts shaking out. We look over at the E-mini S&Ps, positive on the day, but you know, all these candles are just like the bulls and the bears battling it out, and that's the real pent-up energy. Once one of those falls, whether it's the bull and the bear, that's where we're going to see the snap. Right now, we aren't seeing anybody relent at this point, and that's why we are getting that back and forth action. Shows up a little bit better in the NASDAQ, as you could see back there, where we got that tight line going across. E-mini S&P is continuing to trudge higher, but there's been no real discernible pullback to shake out some of these weak hands, which I believe is what is on the docket to happen next. Let me pull up this chart because just noticed I got filled on my earnings trade from this morning, or actually from last night, and I went into the brands, played it to the upside. As you can see, my earnings directional assumptions are not working out as well. I think that the overall market is really expecting some great economic or some great earnings because the equities are at historical highs. The economy's been doing pretty well, but as you've heard from me, the economy is trudging along. It's not bad. We are moving down the road quite nicely. We aren't robust. We aren't like got our superchargers ramped up. The turbos aren't on full tilt. We aren't redlining this thing. We are just right there at a nice idle cruising down the road, all right? And that's what we would like to see, because that avoids the bubbles that we've been seeing the last couple of decades, I guess, the last decade, I should say. So that's what we kind of want to avoid. Having said that, Yum Brands, I played it to the upside, and obviously it's negative on the day by a couple of dollars, but I was outside that market maker move, which helped, and went into the May, sold the 99 puts in there, got me below all the support areas. As you can see here, we had a nice little support at $101. It came down and tested that support. So I was able to get down there below it, right around where that volume node is. So I felt that if we did break below this support area of the 100, it's also a psychological support area as well. That $99 would probably hold as well. We held on the 100, so I'm good there. Wasn't quite getting the theta or the volatility contraction that I expected, and the directional move was completely wrong. So I'm happy to walk away from this trade as a winner. And like I said, went into the May, sold the 99 puts for 49 cents, bought them back for 19 cents this morning. So out of that one for a nice winner. Still managing all the other trades. I haven't added anything new. I'm going to hold off today because of the FOMC. I'm just going to wait to see if we can get a real discernible direction out of any of these markets before I start throwing anything at them. That's all I got for you guys today, other than if you can't take that, take it easy.